A short sale is a transaction where a lender agrees to accept short of what is owed by a borrower on a mortgage. The owner would get started in a short sale process by reaching out to a professional, such as an attorney or realtor, someone who is well versed in the short sale process. If the owner is experiencing financial hardship, that's typically a telltale sign that it's time to retain the services of a professional who understands short sales and understands how and what documentation is required by a lender in order to approve the process. The short sale process can typically take anywhere from 60 days to upwards of 6 months, and it all depends on the owner's willingness and ability to gather the documentation that the lender requires in order to approve the sale. Every lender is different. It's important to strictly adhere to what the lender requests in terms of documentation. Most importantly, the letter of financial hardship and the financial statement are required in any short sale process, and that includes a full disclosure of assets and liabilities. Stock ownership, interest in businesses, all assets need to be disclosed in the financial statements. Also, most often, a lender will request bank statements reporting income or tax returns as evidence of income and expenses. It's important to adhere to these requirements and make sure that you have an attorney that's well-versed in short sales by your side to make sure that information that is disclosed is not adverse to your interests and it's in full disclosure in accordance with the lender's requirements. Typically, once the lender agrees to accept and approve a short sale, the amount that's deficient is forgiven, and the owner will not be responsible for that deficiency. It's important to have an attorney involved in this process to ensure that the approval documentation states as such. Banks typically opt for short sales versus foreclosures because the process is streamlined and much shorter. In a foreclosure process, the bank has to institute a foreclosure action, they have to manage and maintain the property, and then find a buyer for the property. With a short sale, the owner or borrower finds the buyer. All that needs to be done then is for the lender to review the financials of the borrower to determine whether or not the loss is acceptable, and then, if acceptable, the short sale will be approved. There are time limits that the government has placed on banks, and it requires the banks to work diligently to bring transactions to a close. There are no specific deadlines, but the banks are under increased pressure to streamline the process and review documentation as it comes in, and very quickly. Typically, second mortgages and other junior lien holders will be wiped away in the short sale process. Very few times does the junior lien holder receive what's owed on the mortgage. You'll see $1,000 to $5,000 going to second lien holders, but it all depends on the negotiations, and the attorney, the real estate attorney, is critical in this process. So you'll want to make sure that you have an attorney that is well versed in short sales, negotiating on your behalf, especially with your junior lien holders. As part of the seller or owner's team, you'll want to make sure that you have a CPA or accountant involved to advise the seller of tax implications associated with the short sale process. Typically, the owner is responsible, and there are tax implications for the amount that's forgiven. So this is a crucial part of the process, making sure that your team is encompassed with a real estate attorney who understands the short sale process, a realtor, and an accountant or CPA that can advise regarding the tax implications of the short sale. With short sales and foreclosures, credit implications are important to understand. Short sales are typically not reported to credit bureaus. However, foreclosures can stay on an owner's credit report for 7 to 10 years. So it's important to take into consideration the benefits of a short sale versus allowing a property to go into foreclosure.